G'day everybody, this is Johnny Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Friday, the last day of the week, TGIF almost. Yeah, look, the S&P 500 again continued bullishly today, up another. Oh, we'll look at the SPX here. Continued bullishly in its trend, holding the moving averages today. It was lower volume than the previous days. We had, let's have a look, 97 million on Friday. We had 59 million on Tuesday, 76 million on Wednesday, and kind of pulled back today on 63 million. So still close in the top half of the range, but as you all know, we are entering this territory that is going to be very, very interesting. Again, there's the Fibonacci here coming in around 280. That's also where that resistance is horizontally, where we couldn't get past when the market was oscillating. The difference is we are in momentum. We are at the we are, this would be the third touch of this level, but again, we do have headwinds. So we are, again, just to reiterate, high yield bonds, when we go to the hourly chart, high yield bonds are sitting on top of an upward channel breakout. Now, again, as we know, upward channels are bearish. So, despite high yield bonds going up, they're going up as part of what's going to be most likely an inverted fallen angel or a head and shoulders. So, no matter what way you slice it, we're still, because of that pattern, preparing for a bear move, at least in high yield bonds. Now, the other thing, of course, again, just to reiterate, one of the major features that we have been chatting about is stocks above or below the 50-day moving average. And this is going to be very important because no matter what you look at in terms of the overall market conditions, the S&P may continue to go up, but again, as you can see, the high yield bonds are forming most likely a bearish pattern, and high yield bonds, once again, as a reminder. Excuse me, stocks above or below the 50-day moving average. Stocks have never in the history of this indicator anyway, going all the way back to 2010, we've never rallied to these levels and been able to hold these levels for longer than about 3 weeks. So we're in week 2 right now, and as you can see, just starting to turn over. As you can see in the historically, when we do this, kind of we rally up, start turning over, then bang, we've dropped from 87% of stocks above the 50-day moving average, all the way down to 35% of stocks above the moving average. So definitely the time where Acorn's smart money approach is going to be very critical and very powerful for both directions, because it's the stocks that aren't going to drop below the 50-day moving average. Those are going to be the really strong ones. Those are the only ones I'm going to want to hold long or buy long. And which ones are going to be that 50% of the market that plunges beneath its 50-day moving average and drops? Those are going to be the weak ones. So of course that's why we focus on smart money so much, because that's what's going to tell us where these levels are. So we've had this amazing move from 5% of stocks above the 50 to almost 90% above the 50 in just this short time frame of about 6 weeks. And what goes up, as you know, that's exactly, it must come down. And it always has in the last 10 years from this level almost immediately. So looking at the individual stocks, I mean, it's a perfect day to be talking about the differences in longs versus shorts, because you're starting to see some of those cracks appear now. But before we get into the cracks, let's look at some of the longs. The first one I want to mention is PTM, which is Platinum Group Metals, PTM. Obviously, it's a platinum play. Been holding this for a while. If you recall, for those of you who were back with us last year, we originally bought this at around $1.30 or something like that, and have been holding it. And as a longer term play, there's some significant insider buying in the Canadian exchange. You won't see it on openinsider.com, but significant buying on the Canadian exchange. It does trade in the US. The symbol there is PLG. Platinum Group Metals, PLG. But as it's a Canadian company, though, I always look at it on the whatever the home country exchange is. So as you can see, for those of you who might be holding it, I mean, I have been. I've been holding it since August, and it tried to make a nice bounce. There's not a lot of volume in this really, so I'm only commenting on this for the sake of anyone who might be holding it. Very low volume. I wouldn't suggest this is a new setup. Usually it's probably a lot lower volume for most of you. But again, it had a nice little push and is just kind of holding at that $2 level with a possible flag. So we may start to see some activity finally start to pick up in this. When we bought it, it was trading at about 200,000 shares. So we'll see if we can start seeing some interest come in. But anyway, that's a quick one. Going back to the ones you've probably all been following. FII obviously had a great move over these last few days. It hit its first target today, which was 28.93. So you can give a big hats off to our two coaches, Sean and Greg, who actually picked this one out. So if you've made some money on this one, you can send your thanks to the coaching team. This was one of their alerts, and did obviously done very well so far. The next target I'd be looking at here is $30.27. Now the next one, of course, I'm thrilled to talk about INFI. Yahoo! Beautiful setup. Just to let you know where my setup is at. What am I looking at here? SU. Oh no. NVUS. My stop at the moment's at 407. My first target for some potential profits at 543, and then I have my next target at just going to go back here. Yeah, 543. Then I got my next target coming in at 603. Sorry, 597. 597 is the next target on that one. So take a look at that. And but again, it may be, if you do get a bit of a pullback tomorrow, that might be a better entry point. But I just wanted to more so show you that as another example of a flag. Going from flags though back to fallen angels. Obviously, SUP was one of the alerts from last night's video. So that triggered this morning. I jumped into that and I'm holding that. So excited to see how that continues on. It was ended up 6.32% today on 714,000 shares. Yesterday was 352. The day before was 247. The day before that 196. So you're getting this really nice volume build up that is obviously very favorable. So that's great. Now, from shorts, excuse me, from longs, we go to shorts. And there's really two I want to talk about here. One is QNST. QNST is not looking bad at all. Again, of course, this is one we're waiting to break down just below that recent low here of around 1328. I think the entry signal is 1323. You just double check on the website or your email. But lovely upward channel. And again, you can see this nice clean channel, nice clean break, and that gives us a possibility of dropping all the way down to $9, which of course is almost a 40% decline. So keep an eye on that one tomorrow. And as you can see, the money flow has plunged below zero. That's the lowest it's been since we were back at $3, right? I mean that's the lowest we've been since $3. So very good sign for a potential short, just waiting for it to hit that entry signal. And of course, the other short I want to talk about for those of you that decided to play along was DPZ. And I'm so thrilled about this setup because I mean, it was, again, we spent probably what, 10, 15 minutes on this alone in the Smart Money webinar the other day on Monday night, going into how to appropriately draw trend lines and how to recognize what the real trend is. We touched on it on Tuesday night about how we had to go back and find our anchor point and realize what was the pattern before. And a lot of people say to me, "Hey, John, why do you care about what happened 12 months ago or 16 months ago? What relevance is that today?" Well, you have to go back as far as you have to go back, whether that's 3 months or 3 years, to find a pattern that you're 100% confident is absolutely right because it's perfect. And then once you know something you're sure of, that's your starting point. You can draw the pattern, know where the rules of that pattern tell you it's going to next, and then you know when it gets there, that's when that pattern's over. Then you can start looking for the next pattern, and it makes the job so much easier. And when I first looked at DPZ, I had no idea what was going on, and then we went back to the same rules, that we teach over the patterns and probabilities course and the advanced training course, and we said, all right, let's just go back to the rules. And we went in and we said, okay, so there's the upward channel. That said it was going to drop down to 235. It did, okay. So therefore, we're not worrying about connecting this high with this or anything like that, because we know it's not part of that. We know it's something new. And we noticed that was symmetrical with the support levels. And then that told us, and so that told us we had a downward channel, and we only hit once on resistance and then broke through. Well, what do we know about downward channels? They shouldn't do that. They don't just hit once. They hit usually at least 3 times. So it's not a downward channel. So what else has a straight up and down oscillation and then this at a straight kind of vertical breakthrough? Well, aha, a Head and Shoulders. And so when we ran into the resistance of this channel and then rolled straight over, making this lovely symmetrical V at the top, this told us, very likely to be a smart money short here. Now the insiders were selling. The money flow was depreciating, and we had the highest probability reversal pattern in a bull market, which is a Head and Shoulders. So, of course, that's why on Monday night we suggested buying the June 280 puts, and talked about how to play it, how we play it going into earnings, which is to not risk more than you kind of are willing to lose. So. As I described on Tuesday, I took what my normal stop loss would be and doubled it. And that's how much I put into the option, assuming that even if because I'm buying the June puts, if it had have gone the wrong way, I probably would have stopped out with a 50% loss. So basically, and that's how I calculated how much capital I was going to invest into it. And so here today, and the most satisfying thing about this setup was that going into last night, I was looking at the blogs, I was looking at Earnings Whisper, and it's something like 85% of people and 85% of analysts said this thing was going to go to the moon, to 320, to 330. It was going to be this big gap up. But again, that is why you don't follow the noise. That is why you follow the smart money. And the pattern said it was going to plummet because we recognized the correct one using rules. The smart money insider said it was going bad. And of course, what to add to this perfect storm, yesterday there was two different law firms that announced that they were investigating the company for securities fraud. So when people say you can't predict stuff like that, I would beg to differ. It always seems to magically happen once the smart money is already getting out. So there you go. I sold half my position just because a gap downs. It's one of my rules is to at least take profit of some portion, regardless of where it gaps down to. I was almost tempted to sell the rest, but then I looked at the pattern and saw that, yes, we had broken down beneath the trend line, the neckline. We are now underneath all the moving averages, and so I'm going to let this play out. I've already taken my original capital out. I've updated my mental stop using my automatic alerts to let me know if it starts to break back above these areas, in which case I would exit my remaining position. But otherwise, I hope to see this drop all the way down to 215, which would be a really wonderful way to finish the month off. So there's that one. Now, I mean, again, whether you traded it or not, it's a celebration. It's really not so much a celebration of profits here. The most satisfying thing about this is got nothing to do with the money being made. It was actually to do with this level of satisfaction to seeing how well these rules work when you know what the rules are. So there you go. That's all I have for you tonight. And again, just a reminder that if you want to know these rules and if you want this is not a gift you're born with. This is a science that you learn, and anyone can learn it. Because again, I didn't see this at all until I followed my own rules that we teach in the patterns course and also in the advanced trading course. So it's really consider how much you'd like to be able to trade with that clarity, with that decisiveness, and that simplistically without having to worry. And that's maybe well worth taking a good look at getting involved in this upcoming course. It comes with one-on-one training. It is it's me teaching it live, and it's probably the only time I'll be teaching. It's maybe the last course I teach live this year, as our very capable coaches Greg and Sean are going to be stepping in to start taking over some of those courses, which they are of course very capable of doing. But if you want to jump in and learn it now in these kind of markets, do let us know, and we can send you the details and at least save a spot for you while you decide if it's going to be for you or not. So there you go. Drop us a line at info@acornwealthcorp.com, and otherwise we'll see you all in trading room. Take care.